Oh, smack. There goes my baseball cap. Yes, I ain't coming back. Yeah, I'm sure you all know that piece there, right there from Faithless. Well, my friends, it's now for all of you that know that piece right there from Mr. Faithless himself, rest his soul in peace. All I can say to you right now is that the market is doing something interesting, right? We've had all of these fears about the market crash on Trump's tariffs. And truly, my friend, if you are watching this video, you are extremely fortunate right now. Because in this video, I'm going to show you exactly why you should be buying the dippity dip 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 of the now. I'm certainly no rapper, but all I can say to you is let's get on to the Crypto Bliss community and channel. So welcome back and thank you for being here with me once again. Clearly, you guys absolutely loved this video right here. Recession. We're not quite in a recession yet, although I think that we've already surpassed the recession based on the numbers and the figures that we have been looking at. But anyways, it's an insane truth about Bitcoin that no one is telling you right now. And today's video is a catch up on that video. So you do not want to miss out on a single piece of action in this video. So after a massive teardown in the Bitcoin price over the course of today, let us go and have a look at some of the news and what is causing this mighty downfall in the Bitcoin digital gold asset of a beast. All right, so first of all, we can see here there was an announcement of the closed board meeting today on the 7th of April 25 from the Federal Reserve. Honestly, guys, as much as this is cool to hear but I have no doubt that there are discussions about how to blow the liquidity into the market here coming soon. There is no doubt about it. Not because Bitcoin's down, but because the stock market, the S&P 500, the NASDAQ is down, and so many other things are down. I would like to say to you right now, this is a huge time in our history, okay? And as you can see here, this is a statement from Mr. Trump. Slow-moving Fed should cut rates and do it now. Why are you waiting? I think we're all asking that question because we all want to see our bags absolutely pump, my friends. So, oil prices are down, interest rates are down, the slow-moving Fed should cut rates. Food prices are down, there is no inflation, okay? The long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, okay, whose markets are crashing, just raised its tariffs in retaliation to Trump's tariffs by 34% on top of its long-term already ridiculously high tariffs. So this is now becoming a tariff war, okay? Why is this important? We'll seek to know this in a moment. Stay tuned. So not acknowledging my warning for abusing countries not to retaliate, they've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. This is MAGA, and I did speak about MAGA in this video and why that is so significant in all of the happenings that are happening right now. So go watch that video. I'll leave it pinned in the cards just above for you. But as we can see here, yesterday, China issued a retaliatory tariff of 34% on top of their already record-setting tariffs, non-monetary tariffs, illegal subsidization of companies, and massive long-term currency manipulation. So despite my warning that any country that retaliates against the US by issuing additional tariffs above and beyond their already existing long-term tariff, okay, abuse of our nation will be immediately met with new and substantially higher tariffs over and above those initially set. Therefore, if China does not withdraw 34% increase above their already long-term trading abuses by tomorrow, 8th of April 25, the United States will impose additional tariffs on China of 50%, effective of the 9th of April. Additionally, all talks with China concerning their requested meetings with us will be terminated. Negotiations with other countries requested meetings will begin taking place immediately. So thank you for your attention to the matter. This is where you get ready to buy the dippity dip 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 dips. You are getting ready and are buying the dippity dip dip dips. Yeah, make sure to smash the thumbs up for the video right now. That is truly and much benevolently appreciated. Here's the difficult thing, right? With over 2.1 trillion coming out of the market today, okay, the broader market selling off, literally 2.1 trillion today, 2 trillion, 2.3 trillion on Friday. We literally have raised about $5 to $6 trillion in the last 3-4 days out of the market, the global markets. That is epic, 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 epic. Well, US stock market, not any of the other markets. But with the tariffs war that is happening, let's just put it this way. Between China and America, if the two of them continue to do what it is that they're doing, there is absolutely no chance in hell, okay, that they can continue to raise tariffs and raise tariffs, because it's not the governments that are struggling, it's the economies that are struggling. So if the two biggest economies in the world, China and America, are actually busy in a tariff war to see who can get the highest, what I'm foreseeing here is that Mr. Jerome Powell will be forced into a corner to lower interest rates, cut the shit out of them, print money, absolutely crazy, because it's not going to happen like it did in COVID. It's not going to happen like it did previously. What will happen is it will likely go into business rescue, okay, and hence why some of these businesses will start to take the liquidity, because they've been literally tariffs in the market. That's just what's happening. So somebody has to course correct. And the only way to do that is by lowering rates, printing free money that goes possibly into business rescue, which then goes back into ticking the economy over. It creates more jobs, creates more employment, creates more the ability in the economy by way of doing that to print more money, to essentially get people to buy more products and stimulate the economy back up. This is undoubtedly going to happen. It is just a matter of time. And if you are not on the time of this situation, you're going to lose out on the biggest opportunity in all of history, my friends. Okay. Now here is why. Because we're just 0.33% away from Trump tariffs triggering one of the 10 worst day drops in the S&P 500 in all of history. Okay, you can see here, we literally are just a moment away. The Great Depression in 1932 tackled the 13.89%. Black Monday was 26.3% in one day. Well, my friends, this did not happen today, okay? This happened, we literally are at one of the worst, but not really much at all. In all fairness, it's worse than the COVID pandemic, okay? And I'm going to use that as an example beyond this moment, because this is where history will be discussed. Black Monday, 20%. Black Monday, 26%. That's pretty much it. And another Black Monday, age 7, 11.8%. So between 11.8% up to 26% is where we're looking. We're kind of at that, just at the bottom. So we could expect a further 10, 15% down. Do I see that happening? Unlikely. Here is why. Let's have a look at the charts now. So this is going to be the most important. Having a look at the 100 and 200, okay? Let's have a little bit of a closer look here. First of all, starting here. Now, generally, when we look at the 50 moving average, okay? If we close below that, we're okay to wick below it, okay? But if we close below it, let's just delete that line, get clean here. If you can see we subtly wick there, there's a body below this candle. That is absolutely dangerous. And the likelihood of us coming down to this box here, okay, which is the EMA is at $64,500. That'll be the target, my friends. I'm just saying, okay? When last in history did we wick below the 50 moving average? Well, we wicked here, we bought back up. We wicked here, we bought back up, and that's it, okay? So if we go back in history and we look any further, the last time we closed below the 50 moving average, which was right here, we wick, buy back up, we made a huge new all-time high. I think we're at this position right here. We could be fooled, and honestly, we could have a buying back opportunity like that. But in saying this, the moment we came down and we closed this candle below the 50, we had a massive pull down right to the 100 EMA. We rejected, we pulled back up, we smashed right there down to that level over there. Now, here's the interesting fact about this, is that we're not quite there at this point. We've had a massive drawdown. On the weekly time frame, we're actually in a falling wedge pattern, okay? A falling wedge pattern. We're at the bottom of the falling wedge pattern. We've tapped this level right here, okay? Look at how perfectly we've tapped that 74,000 level, okay? We're sitting on this 50, above the 50 EMA right now. The MACD is crossing very hard down, okay? The stochastic is extremely oversold now for the last, since the 20th, for more than a month, okay? We cannot hold these. Now, the truth behind all of this, my friends, is if we start to add in global liquidity here, okay? We can see here that global liquidity, I'm going to pull this down on the daily time frame, okay? So I can share with you where we're at right now. Global liquidity told us, yeah, we were going to go down. We're at the point right now, right at this pinnacle point here. We're going to go sideways on the daily time frame. And yes, we might have a little bip down further down the line. But truth be said, to my community, have a look at this. This really is signaling to us right now, okay, that by the 7th of May, I've said this to you so many times, the liquidity will pump back up into the market. So right now, we're literally 1 month. We're probably going to sit sideways for another month, be volatile for another month, okay? That means we have the opportunity for the next month to continue to accumulate. Now, why would you want to accumulate? Here's a few other reasons. First of all, the S&P 500 is doing the same. Stochastic is coming down hard. MACD is coming down hard. The price action we are literally sitting at 22% down, okay, which is recessionary territory, okay? If you see this is a wicking candle that is under the 6.618, which is telling us that we are way oversold here. So there will be buying opportunity probably right back up to at least close this gap, if not this gap back up here. Very simple move in trading. Now, if you guys are with me, you would know that I bought this candle. I did say I was going to buy at 75. Look at that energy right there. I put a buy limit at 75. You don't believe me? Okay. There's my buying candle. If you want to go down even to the 15-minute, look at my buying candle. Okay. Right on the bottom. Okay. I did tell you that I would do this. I did tell you that I would buy the bottom here. Okay. And I bought the bottom to bring my buy level back down. Now, the reason I did this for the community is to show you guys that I'm not afraid that the market comes down. Okay. I'm just going to add more liquidity to my position. And I will slowly but surely, based on price action, do that on the way down. So if we are to come down to those ridiculous levels that I was talking about to you here, down at $65,000, okay, you best be sure I'm going to be buying here right now. So make sure to use my Bybit link down below. Get yourself up to $30,000 deposit dollar bonus. And come, I show you, I indicate to you. And yes, my stop loss is here. But like I said, I'll even add, once again, at the 75. I'll add in some probably at the 73, probably some at, if that is the case. I will continue to bring this level down as we go down, okay? I'm not adding $300 here in this position right now. I want to see where we're at and what we're doing. Do I think we're going to go further? I doubt it, my friends. So here is why, okay? First of all, Bitcoin to gold is decoupling, okay? Bitcoin is way up against gold, epically high against gold. And it is also epically high and going to push for the breakout on the NASDAQ. Okay, look at where it's tapping. It's breaking out against the NASDAQ. You can literally, for one Bitcoin, you can, NASDAQ stocks. Okay, this is epic, my friends. And this is becoming more increasingly clear that right now, Bitcoin is the hedge against everything that is busy happening in the world right now. Okay. And so, like British Hodl says here, the world is about to print so much money. The last time this was because of China's war on the world with the flu. This time it will because America's war on the world with trade. Ultimately, there is only one thing that happens. Money gets printed This is why we Bitcoin. I'm extremely fucking hyper bullish on Bitcoin right now. The more I see, there's no way countries don't use this as an excuse to pump wartime levels of liquidity into their currency, which means the only one thing for Bitcoin: to the moon and beyond. Okay. Now, I just want to share something with you on this. Okay. Here is Mr. Michael Saylor. Bitcoin's volatility is a gift for those with more time than money.
Volatility was a gift to the faithful. It scares away the tourist. It scares away the lazy. It scares away the people that are already conventionally rich, that have all the money. If you're a 20-something or a 30-something and you're willing to do the work, if you're willing to spend 100 hours or 200 hours, if you have more time than money, then the volatility of Bitcoin is a gift to you. If you have more money than time and you're arrogant and egotistical and you just pick the obvious, then if the volatility goes away, you buy Bitcoin. If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
So in other words, Mr. Michael Saylor is telling you that you would lose out on the opportunity of net P&L, profit, net loss. Profit is what he's referring to, of 9.9 million. And to be very exact, that's actually 9.9, where are we? 9.923 million. So my friends, it doesn't matter that Bitcoin's down 5.2% for the day or 6.5% for the last week. It doesn't matter that the market cap is just taking a little hit right now. These little dippity-dipper-ripper-lippers are there for you to buy. And here is the most important reason why. But make sure that you are using my link down below. And yeah, let's have a look at this, my friends. So this is now an overlay of the money to supply on the weekly time frame, including the EMA. I'm going to just remove that, the M2 supply for now, so that we can see very clearly. The EMA on the US dollar on the weekly has actually never ever come below the 20 moving average. Okay, this is going all the way back down to 1959. Okay, ever has it come below the 20 moving average. And I can tell you right now, my friends, if you're watching this channel, judging by this for the last 90 years, it's never going to come below there. And look what happened. It dipped below here during 2023 from all of the liquidity grabbing and squishing, etc. Since Trump started, this is what's happened. The fucking money has come back into the US M2 money supply. So that's exactly what he has said on the discussion here about inflation and bringing billions of dollars back in. If you're not watching this very closely, look at how many years this goes on the top here. Look at where we're at. We're bouncing off of that 20 moving average once again. And look at the moves that we make. The last time I spoke to you about this, which was somewhere around here, I told you that we could come up to $27 trillion. Oh, I think you'd like to see something very interesting, right? The M2 money supply liquidity index right here, ironically, look at this. It's telling us that as we started to buy up and increase here, this is where we're at. We're going to have a money printer session, okay? On the 7th of May, it is telling us the money goes up, okay, until the 25th of August, and then some comes back out. And then we fuck off to the moon from 26th of February 26th, okay? Then the money goes up. So this actual money supply is going to continue all the way into 27, okay? Until the beginning of 27. This is massive. Yes, we're going to have a major pullback out here, and then we're going to have one massive liquidity pump once again from here to here. Look at where we're at right now at 21.67 trillion. This is all the way up at $29.8 trillion. In other words, we can expect an estimated $8.5 trillion to come into the market over the next 2 years. And this is why I have to say to you, going forward, my friends, that truly, we really are at a pinnacle point right now, okay? If you are about to leave the crypto space and sell like everybody else is doing right now, you will lose out on the potential of grabbing some of that $9 trillion just for you, okay? So thank you for being here with me today. I truly hope this video has brought you such enlightenment as to where to go. And if you appreciate this content that I'm bringing to you, okay, please make sure to subscribe to the channel down below. Make sure you are connected with Crypto Bliss community, and make sure to like the video. Thank you for being here with me once again, and we will see you on the next one. Take care and have a lovely evening.